Good morning, good evening, good afternoon, everybody. Thank you for joining the Black Bull Markets webinar today. We're going to be talking about day trading strategies. We're going to be mainly discussing, I guess, building confidence in your day trading strategies and how we can start analyzing some charts on shorter term timeframes, given longer term analysis, making decisions, looking at potential news events, also having a look at opportunities in the market. It's been extremely exciting over the last couple of weeks. We've seen the dollar dominance trade in play. We've seen gold fall down out of a range, down into a new support area. We've also seen the US markets come off real positive earnings over the last week. And then, of course, you had that massive ADP beat, and that was a stimulus for this dollar rally. I'm just going to add some charts that we're going to be looking at in the today's session. We're looking at, of course, we're looking at gold. We're looking at the NZD USD. This is what I'm particularly keen on at the moment, and also the pound NZD, which has been on a tear in relation, of course, to a lot of weakness in this part of the world's respective currencies. The Aussie, the Kiwi, both falling to yearly lows, and in addition to that, not having much of a respite with this dollar strength really kind of picking it out, seeing dollar up across the board. So just to give a bit of a structure for today's session, so we're just going to be, I guess, looking at some charts, looking at some analysis, and then following that, we're going to be answering questions. If you do have any questions, or if you want to chat in the meantime, feel free to ask them through this webinar session. If you want me to have a look at any charts as well, we can also do that through a chart request. As you can see, I've got a sell running on gold at the moment. Started selling, we saw a break of that support area over here, and essentially just held it without a take profit, kind of letting it run. But it's been running for a while. Now, if you're selling gold as well, just to note, there is a nice little positive carry on that as well. So it's interesting market to be in. Gold longs rather quite expensive to hold. But if we just skip off to what we were talking about, just some brief market coverage, we are seeing quite some significant strength across the dollar, the pound, the euros creeping up over 110 as well, and you're getting your currencies like Kiwi and the Aussie getting beat down somewhat. If you go to a weekly chart on the pound Kiwi, you can see the pound Kiwi's at a high we've not seen since that real initial move through COVID. Actually, we saw big moves in the currency markets, and if you're a fan of the wick fill strategy of momentums take out, that top there could be a target if we get continuation of this move to the upside. This is a weekly chart, but I guess this is a good place to start when you're analyzing FX markets, especially if you're trading outside of a range trade on these higher time frames, because you can start picking out opportunities for market continuations, and it's always safe, I guess, or safer when you're in my view at least, when you're in market cycles like this to stay with the trend. Saying that, we do at 210, it's a decent psychological level where we've had some sort of resistance previously, but a break above this, you could have pathway all the way up to 214, which is your next resistance area. Of course, we saw that at that level there. So how do you trade that? Well, that's interesting. How do you trade a market that's trading at a 4-year high almost? Well, if we scroll down the time frames, you can see steady moves here to the upside. Of course, you've got a bit of a channel formation that formed. This is daily chart now, remember? So that was back in Feb, and so you broke below that channel, and if we just keep drawing this to the upside, you can see still somewhat holding to this upward advantage, but just continue that channel. You can see an upward trending market pretty consistently. Excuse me, straight lines. Of course, in the MetaTrader, you can actually draw straighter channels, and even in TradingView, it's a bit easier. But just to give you a rough idea, basically, the point I'm trying to prove that it's an upward trending market. Now, what does that mean? Well, that means that if you're looking to buy, do you buy at the top? Well, for argument's sake, probably you don't want to buy at the top of a market. If you're a bit more risk on, perhaps, but you'd want to look at lower term timeframes. This is what I would do personally, and trying to identify potential support levels. Now, the rule is if you're in an upward trending market, you're looking at buying dips essentially, or if you're in a downward trending market, it's selling tops. So how do I recognize a buying opportunity? Well, in this type of market, first thing to do, I guess I've started with a clean chart, is to look at support areas. So what I've done on the hour time frame is I'm just going to draw out a few areas of interest. So we've got 2 wicks here, which forms a resistance. The third wick, multiple top, and a wick down on this candle here on the 8th of August, which has made that as a support level. Similar thing happened here. You've got two wicks on this hour forming resistance, break of resistance, which formed a new support area. What does that mean for support and resistance strategies? Well, it means that you've got some ranges to play with now. If you're looking at buying the pound kiwi or selling the pound kiwi, either way. Just for argument's sake, we're just going to draw a nice support area here. As you can see, this market on the hour time frame looks really, really good, where you can clearly see support and resistance areas across it. If anyone, by the way, just wants to shout out through the webinar, just anytime, ask a question, we can get straight onto it when I see it, of course. But just to finalize this point, we've got momentum traveling to the upside. Where are we looking for buying opportunities if we're looking to buy it, or even if you're looking to sell it? Well, potentially you've got 2099.40 here drawn out at this first support level. Now, would you want to buy it to take it higher? If you get the markets on the hourly time frame traveling down here, rejecting this support, forming another new candle like we've done there, if we just break down the dynamics of that recent move, got a rejection, the support, previous rejection, you've got a bullish candle here. It's closed, it's not met that last wick, so potentially we could see more candle formations beating down that support area. Right now it's ranging. The idea is if you break below here, you're not looking to, if you're looking to buy the market, you're really looking at the next support line for a firm entry level, 209.56. So that's what, another 30 odd pips below that area as a potential buying point. Again, if you're looking to sell that top, if you're thinking, wait, hold on that weekly time frame, what we did see, considering that previous high is it's just for reference, let's just remove all these lines, let's skip to the monthly, weekly, and we can see here, hold on, we've got we've got on the chart there, we've got a bit of a resistance here. Potentially, that's where the market's kind of failing at 210. It is a nice psychological level on the kiwi. It's a 5% increase from that $2 mark, which is also a nice psychological level. But if you're thinking, hey, this is a bit toppy here, we've come to the top of the range, I'm looking to sell the market. Okay, well, let's go back to our 1 hour time frame where we were before. And if you're looking for a quick, if you're looking for a scalp, potentially, if you're thinking it's a reversal opportunity, we'll draw back our support areas again. Where are you setting your take profit? Where are you setting your stop loss? Well, you've got a few levels here to consider. And this is the basics of support and resistance theory, I guess. So we've drawn back our lines on the hour time frame. Say you're looking for an entry level. Where is my entry level? Well, you could also use 209926 as your first entry point. With a smaller position, perhaps. Say if you're looking at your risk to reward ratio, you might test the waters out at this level here, test trade, and then if you clear your target price of 209.60, which is that next support area, support 2, let's call it support 1, support 2, you clear that, then your take profit could carry you all the way down to 208.404, which is predominantly the baseline of this larger range that we formed so far in August. Saying this, I'm not a great fan of counter trend trading. We prefer to have a bullish bias, but you could also trade this down to your buy entry level, which could be around the 208.40 level. So the point of this exercise is to show you that even if you recognize this area as potentially toppy and playing it down, here are how support and resistances, or drawing these support lines, can help you identify take profit areas. Now, where would you put your stop loss? Well, in this case, in my personal, what I would do is personally put a stop loss at the top of this high, because we've identified that level at 210.59 to be around the weekly major resistance level going back to 2019, as we saw initially. So that would form my personal SL over there if I'm looking to short the market below 209.26, and my take profit would be around this 208.40 level. That's if you're without a strict risk to reward, even if it's one lot. Look, what are you risking per se from an entry at 209? You're risking about 69 pips. So you're risking 69 pips, let's call it 70 pips, to gain from that entry level 1,520. So almost, well, it's, 69 to 150 rather. So 70 to 150. So it's almost over a 2-to-1 ratio. So if you wanted the exact numbers, that's where you would place it. That's my little analysis on pound kiwi. All right, so we've got some questions here. We'll just run through them quickly before we get on to the next chart. What point would you say the trend line has now become a resistance level? So I think just trend lines in general and resistance levels, they could be either used in conjunction or independently. If we were to just look at the pound kiwi as a sound example, right? Just purely because of how it's been moving to the upside. Trend lines, I guess, can be treated independently. Where can you find resistance levels at trend lines? Potentially breaks of trends. If we draw this up here, we can see the main theory is you get those 3 wicks to form an actual trend line. You did break below over here we just draw it in. There's your break, your cross. That could mark the end of that trend over here. at 199,520, which could also, in theory, form a new support area. But what you did see was that it broke below and then quickly broke above again, and then in effect formed another upward trend line. Say if we draw it from the base of that all the way across here, you've got another probably less of a gradient to that initial move in earlier on the year, but from about the middle of the year to present, it's been operating pretty nicely, supporting that area. So hope that helped. And would you mind having a look at natural gas? Of course, I can do. Now, with natural gas, of course, there's a lot of fundamentals at play which impact the pricing. And, you know, going just broadly speaking, of course, you've had big depreciation in the price following, you know, the direct correlation pretty much to the day when Russia and Ukraine conflict began, geopolitical concerns began. But if we're looking at it from a point perspective, we're seeing prices return down to where they were back in the early stages of 2021. Now, if we break it down onto a smaller time frame, now holistically speaking, will it go back to the $5 mark plus? Potentially, but I mean, that again is very difficult to decipher, not knowing the future of the political situation, stability, etc. It's like all commodities that are used internationally and produced in you know, a limited amount of countries. Those particular countries' geopolitical plays do determine the pricing. But if we're looking on smaller term timeframes, wow, we've got some interesting moves happening here. See, of course, this big spike recently. I would assume you're looking at this on the lower term time frame. So if we just start on the daily, ignoring that big weekly shock, we can pretty much see a nice move. So the point of that little spiel about geopolitical politics, if we have stability or prices, I guess, all of these situations priced in, we could potentially get some moves here. So right now, where are we sitting? Well, are we sitting at resistance level? Potentially. You do have this bit of this erroneous almost candle here that's sticking out from the 23rd of February. So just for argument's sake, let's draw that as our top line. So we're taking the top of that candle as our resistance, potentially, arguably, daily support there. Now let's drop it down to the 4-hour time frame. We can see we're pretty high at the moment. Now the idea is, okay, break above, amazing. We've got some wicks to take out as well. So just for argument's sake, let's just draw out the top line of those wicks here, which also coincides to this candle, doji formation, high wicks on coming into the end of June, start of July. Break above, that candle here looked pretty bullish as to where the market closed over the last day. So if we zoom in on the daily chart, you could find space to travel up here another 3% up to 288 from a technical perspective, considering these last 4 daily candles have been pretty bullish, and that looks almost like it wants to go higher. There's no real top wick on yesterday's daily close, very minimal. So you're looking at today's market, you're looking for a close above yesterday's candle, and then you're looking at potentially some short-term opportunities to take out 280, 286, 287. So it's natural gas. To be honest with you, I don't actually trade natural gas. I don't look at that market, but hopefully that helps. All right, before we skip into my gold chart, all important gold chart, can you explain how RSI could be used to determine the support and resistance level? Now, RSI, of course, if we just go back to our pound kiwi example, that's a really nice example of potentially overbought market if we're looking on the weekly time frame. Remember, your RSI is to the power of 14 days or 7 days. Now, it's very important which one you use because it could skew your reading of the RSI at any time you're looking at it. RSI is not always indicative of momentum trades because you could especially in markets that have broken out from ranges, right? And they could operate at an overbought territory for a while before they actually turn around. So even if we're looking at this pound kiwi, right, on the weekly time frame, you can see it's at an overbought territory, and in fact, it does coincide somewhat with that the move here. But you know, in respect to that, it was also highly overbought. Higher reading on the 6th of February, which was around here, where you did have a big fall. Now, what we're seeing, though, underlying is a lot of US dollar strength, pound strength, more so Kiwi weakness that's pushing this to the downside. So does the RSI take into account, you know, all of those other factors in play? Probably not, but it does look at these technicals. And overall, does it work? Does it not work? Potentially, I would say it does. It does work as a nice sound confirmation indicator, as a secondary indicator, but to use it as your primary indicator, I would probably not be a fan of that, because as you drop to the lower term time frames, you get a lot of these different points that could make you not justify your trade or put doubt in your mind. So that's my thoughts in general of RSI. Overall, I think it's really nice to have a look at confirmation point. If you're looking at that, say that weekly resistance level on the pound kiwi, say, hey, yes, RSI confirms it's over 70. I'm potentially looking at a bit more sellers coming in rather than buyers. Now we've done that, let's look at gold. Now, gold is been on an interesting run as of late. This is the 4-hour time frame. If we just look at the hour time frame to show you and dissect these moves. Big move down at 1970 from 1980 all the way. It was a consistent sell-off, pretty epic, right? You're looking at $35 almost an ounce from top to bottom of that trading session, and that was the ADP news that actually sparked that initial sell-off, with people coming out of that gold trade. For me, that was the confirmation when I see consistent, really good sell-offs, that you're looking at waiting, not, you know, in my view, not trading that, but looking at where the price reverses into, and seeing again where you can pick your entry for another potential trade. So of course, we just look at it. We saw that big sell-off initially. We saw another sell-off, and there we go. So you saw a buy up, and then you saw another sell-off, gap in the market on that last weekend's movement, another move to the downside. You can see that all these highs are starting to get sold. So a few more bearish bias in gold and bullish. You can see I've got this trade running, and you can see on MT5 where I place it. We can talk about the logic of why. In hindsight, it's always a beautiful thing, you know, but it just shows you how this strategy of using support and resistance level could assist you when you're making these trading decisions. So let's start on this 4-hour time frame and start to draw out some key zonal marks, I would say, of gold. Now, if we draw out, I always like to start current price. So 1925 is what we're operating currently. If we just take it below that last wick here, just for a gauge of reference, does it sit on any support? Well, not on the 4-hour, on the 1-hour. I don't see it. On the daily, perhaps we could see something. Is there anything stopping gold from moving lower? Well, you're coming into this choppy range here, which actually bottoms out around the 1900. Now, of course, gold does, there is that psychological play with gold as well. You're looking at it 1892, so slightly below the 1900 mark. But for reference, we're going to just put a line just around the 1900, just so we know where we are. It's not perfect, but it'll do for now. But we can see here, we've got a decent range. If we just see if I can put a nice little rectangular object here. And that range is very important because it marks the essentially the next point for gold to operate in if we continue to slide lower. Why is that important? Because if you're selling this market or looking to sell this market, you've got some targets to the downside. Gold likes to operate in ranges for a while. Now, this is a daily chart, so if we skip down to the 4 hour, we might get better perspective of this. There you go. So currently around 1925.36. 1922 was the low of the last 4 hour candle. Break below there, entering into this new trading range could mark territory down to $1,900. So that's 200 pips rather, so another 1% move in gold to the downside. Where would you want to be trading gold? Well, there's a lot of fundamental bias behind gold. Everyone has their opinions of gold. My philosophy with gold is trade what you see. If you see the market trending towards the downside, forming this pattern of reversal, rejection of these highs, you do have that similar strategy what we were discussing in regards to selling those heights. So, okay, we've identified 1922 as our low of the recent candle. If you're looking at another selling opportunity, where is that? Well, let's draw it at the base of these support candles here. You've this week and this week, also that week around there. So around 1930 lines up nicely. 1925 to 1930 could be another selling opportunity. If it passes that, let's draw another one. Let's draw it at the top of this range. You see a lot of wicks around here. 1938, and finally get that one there. It's really nice. Those two support candles turning into resistance, almost touching that. 1942. So what does this mean? Well, as we know, gold momentum does pick up fast, right? My overall bias on gold is a short down to 1900. But if you're just looking at this market, the important thing is to strip your chart of indicators, identify the trends on the higher time frames, skip down to the lower time frames, draw your support and resistance areas in, identify potential areas to, like I said, sell highs in a bearish market or buy lows in a bullish market if you're looking at these trend trading strategies. Now, you could be doing the entire opposite thing of what I'm saying and still make money. But overall, probability being on your side, using risk to reward, essentially trading with the trend in these momentum-driven markets, using price action strategies could be more favorable. So essentially what we've done is we've identified potential areas of interest to short. 1930, 1938, 1942. What happens if it moves past there? Well, you want to go in with a smaller risk if you're shorting here. Say if the overall trade size you're looking to trade is one lot. Maybe you'll do a 0.01 trade, a 0.1 trade, a mini lot here. If you hit a stop loss on this trade, you could short again by going in at half a lot here and then say 0.75 here. Now that's just compounding your short position. Of course, considering every trade placed with a stop loss. Where's your take profit? Well, like we said on that 4 hour time frame, we're looking at 1900 as the bottom of that range as a potential take profit area. If we're shorting that market. Sorry, but we're just going through a question here. What are some of the indicators which we can use on daily time frame confirmation of the trend. That's an interesting one. Now, if we strip these charts clean, the best confirmation that I would advocate for, if you've been following my videos in the past, you would see that I've used that quite a lot, are the moving average crossovers. So what I generally do is I'll put a 20 and a 50 in. Now, just for habit's sake, it's always good to try and look at different indicators, just to get some sort of confirmation if you have a doubt about a position. Every trade should be placed with a plan, and that plan should be coherent with what your strategy is about. But if you wanted to cross-check your strategy, this is what you could use. Now, this would debate the moving average crossover, where it's at the moment, would debate my bearish bias, because it's showing my 50-day, so rather my 20-day crossing with my 50-day. Now, what does that mean? Well, it shows that we're in bullish territory according to moving averages. But if we drop to that's on the daily time frame, mind you. But if we drop on the 4-hour, so bearishness from 1966 around actually where my entry level is. You see that crossover here? This theory dictates crossovers significant for entry points. So what does that mean? Well, wow, we can see it nicely here. 20-day above the 50-day sell, 20-day above the 50-day sell, 20-day above the 50-day sell. So we're in sell mode at the moment, if we're based off these moving average crossovers. Now, this is not always accurate, but if we look on this hour time frame, we can see it's pretty consistent with selling opportunities. Just look, just as an example, if you sold that at 1967 and you closed it when the other your 50 rather crossed above the 20, you would have made 100 pips there, right? Similar thing here. You saw a crossover, you closed it down here. Now, hindsight's a beautiful thing, but it's just an example. 222 pips. We're currently a signal here to sell at the moment. Holding it 50 pips. Well, down here, it's actually 114. So until that crosses over again, essentially is where you sell it. So market's telling you to sell according to that. It's interesting. Hope that helped to answer that. We're actually across the 30-minute time slot for this webinar. So I hope everyone has enjoyed it. It's great to see the attendee numbers increasing during these live sessions. Of course, this will be posted on our YouTube channel for you to go back and follow again. It's not as impactful as it is in real time, especially if you're looking at the markets, but definitely helpful to understand the theories behind trading. So I wish everyone a profitable week in the markets. Definitely keep up with your risk to reward ratios on every single trade. Trade wisely, understand your support resistance levels, trade with confidence, and for any questions, feel free to let us know. Wish you all the best. Thank you for attending again.